Traders at UBA said the inflow of bond coupons into the market this week provided a slight relief to market liquidity. Meanwhile, market players anticipate FAAC inflows to come in today. Chukanwachuku, head of ALM and balance sheet management at UBA, joins me now for more market updates. Chuka, thank you for taking the time out to join us today.
Thank you, Esther.
But talk to us about the inflows from the Federal Accounts and Allocation Committee.
Okay, thank you. That inflow hasn't come in yet. We expected it yesterday, and we're still expecting it to come in today. Well over 944 billion is expected to come in to be shared between the three arms of the government, state, local, and federal. But it hasn't come in yet.
All right, let's go on to other market segments and the action we've seen today, starting with the yield curve at the bond market, where you saw the most activity.
Yeah, the yield curve in the market has actually been affected, both the market, the T-bills and the bond market. It has actually been elevated due to the illiquidity in the system. It is important to know that the system opened in negative of well over 280 billion. And so that has affected the trading. We saw a lot of bearish sentiment, people trying to sell off some of the instruments in order to create liquidity to fund some of their activities. And so we've seen yield elevated on the longer end. For example, the 2053, moved from 15.8 to well over 16.1 levels, and that has actually created a bit of uncertainty as regards the direction of movement.
Now, for the Treasury, let's give us a sense of where the short-dated bills are. For instance, the 90-day, the one-year bill. What numbers are we looking at?
Okay, so the 90 days came out around 5 levels. The 182 days came out around 8% levels, and then the 1 year came out around 13.97, and that bill is currently where the activity is. It's currently trading around 300 basis points below where it opened, around 11.5. So we've seen a lot of movement and a lot of interest on that 1 year bill.
All right, let's talk about, we'll come back to the fixed income. I wanted to quickly just check with the Naira for today. Talk to us how the Naira traded today.
Yeah, Naira has been stable. Yesterday, Naira closed around 771.69. It's currently trading around that level, 771.65. So there hasn't been much movement. I wouldn't really say it's appreciation, neither will I say it's depreciation. It's just within that level.
But any expectation, for you market traders, what conversations are you having in terms of expectations on supply or how things could change in the coming weeks?
I think what is important is government policy, which I believe that with the swearing in of some of these some of the ministers, the direction of the economy or the direction of the government policy will begin to play out, and that will bring in confidence. And so we should expect that over the next few weeks, few months, some of these ministers will be able to give us an idea what they intend to do and what the government intends to do. So I believe that the policies that the government put in place, especially on the fiscal side, will help increase confidence, and then the Naira will begin to appreciate. All
right, let's talk about the outlook for next week for all segments of the market.
Okay, so I will start with the T-bills. So like I said earlier, the 1 year, which came out at 13.97, is currently trading around 11.5. We expect to see interest on that bill, especially with the FAAC coming in between today and then on Monday. We should see a bullish sentiment on that side. So I expect to see further decline on that bill, probably another 50 or 100 basis point decline. On the bond side, we expect to see interest, especially on the shorter end of the curve, which is the 2025, 2026, and as well as the longer end of the curve, the 49 and the 53, because that's where interest of most PFAs are. So we expect to see bullish sentiment, especially with the FAAC inflow coming next week.